Welcome back to Investing Talk Podcast. We're here again, taking the information you send our way, articles, research, notes, and really trying to pull out the key insights. We want to give you that shortcut to being genuinely informed. Today, we're looking into a really complex situation surrounding the healthcare company Agilon Health. The big question we're asking, based on everything that's been happening, is Agilon Health a stock you should consider buying right now? Or is it just too risky? We've got reports here from places like Wesley Park, the A-Invest newsletter, even some alerts from law firms to try and piece this puzzle together. And hey, if you find this helpful, please do subscribe, like the episode, maybe leave a comment. If there's a specific company you want us to analyze like this, definitely let us know in the comments. Some listeners even buy us a coffee, which is always appreciated.
Yeah, it's a fascinating one today because the sources, they really paint this picture of a company at a critical point. A crossroads, maybe. We're going to try and connect the dots, between the leadership, the finances, the market reaction, see how it all fits together.
Okay, let's get into it then. And I think we have to start right at the very top because the leadership situation seems like a huge red flag according to these reports. We found out CEO Stephen Sell resigned back on August 4th, 2025.
And the timing there is key, isn't it? It wasn't just a quiet departure. It happened immediately after they released their Q2 earnings.
Right. And those earnings included some really bad news.
Yeah, really bad. An $85 million write-down linked to overstating risk adjustment revenue. That's a core part of their business model. And on top of that, a $104 million net loss for the quarter.
Wow. How does that compare to before?
Well, get this. That loss was a 235% increase from the year before, so losses ballooning dramatically.
Well, that's staggering. So Sell's out, and co-founder Ronald Williams stepped in as executive chairman.
Correct. But the timing, again, it looks really suspicious, especially because, as our sources point out, the company had actually reaffirmed its 2025 guidance back in May, sounding pretty confident.
So confident guidance in May, then boom, CEO resigns, alongside a massive loss and write-down in August. That doesn't look good.
It really doesn't, and it raises that question, was this a failure to keep track of their own data? Or maybe more concerning, were they deliberately downplaying the risks they already knew about?
And that distinction matters, right? Especially with legal probes starting up.
Absolutely critical, because Agilon Health's market value has already tanked, lost something like $1.3 billion since February 2025. So the stakes are incredibly high.
Okay, so leadership instability is point one. Let's move to the financials themselves, because suspending the 2025 guidance, that's another big warning sign.
They blamed market volatility.
Yeah, a convenient excuse sometimes. But the sources suggest it's more than that.
Oh, definitely. The Q2 numbers, they tell a pretty grim story. Revenue actually fell 6% to $1.39 billion.
Okay, a drop in revenue. What else?
Even more concerning is the medical margin. It swung from a positive $106 million.
Which is what you want in value-based care.
Exactly. It swung from that positive number to a negative $53 million.
Negative. So they're losing money on patient care itself.
Precisely. That undermines their entire business premise. And adjusted EBITDA. That went from a small $3 million loss in 2024 to an $83 million loss in Q2 2025.
These aren't small adjustments. These are huge swings in the wrong direction.
Yeah.
Our sources seem to think there's a systemic breakdown in how they manage risk.
That seems to be the implication. They talked about using dynamic data platforms for improved visibility.
Yeah, I remember that buzzword.
Well, maybe that visibility wasn't so clear after all. It looks like maybe that was a bit of a hollow promise, especially when you see things like a $66 million hit from prior period development linked to markets they've already left.
So cleaning up past mistakes, too.
Seems like it. And while their membership numbers look stable, around 614,000, that's partly because they've been pulling out of unprofitable markets. It's not necessarily healthy growth.
Okay. So persistent losses, burning cash.
Right.
What was the cash burn rate?
About $104 million in the quarter, which is, not sustainable long-term without more funding.
Right. Okay, so shaky leadership, deeply troubled financials, and now we get to the legal side. This is where it gets really serious, doesn't it?
It really does. These aren't just theoretical risks. The sources are clear. Investigations are happening now directly because of that August 4th earnings report.
Which firms are involved?
We're seeing names like Pomerantz, DJS Law Group. They're actively looking into whether Agilon's leadership basically misled investors.
And what are the specific allegations?
Well, a few key things. Failing to disclose the risks around that declining risk adjustment revenue, the core issue. Also, allegedly withholding the news about the $85 million write-down until after the stock already tanked 25% in after-hours trading.
Ouch. So investors didn't get the information until it was too late.
That's the allegation, and maybe the most serious one, claims that insiders might have sold stock while knowing this bad news was coming.
Okay, that is serious. It really sounds like a potential recipe for completely destroying trust.
Exactly. And you saw it in the stock price, right? It fell off a cliff from $2.20 down to $0.88 in just 2 days after that news broke.
Wow. So the market reaction was immediate and severe. What does this legal scrutiny mean for the company's sort of ethical standing?
It's a huge blow. The market has judged them pretty harshly already. And you have to ask, were these just mistakes by the former CEO, or does it suggest a wider cultural problem with transparency?
Right, because these legal liabilities, they don't just go away. They add another layer of risk on top of the operational problem.
Absolutely. It makes everything harder, raising money, finding partners, keeping good employees. It's a major headwind.
Okay, so putting this all together, leadership chaos, financial distress, legal battles. For you, our listener, the crucial question remains. What does this mean for Agilon Health as an investment? Is it a buy, a sell, a hold?
Well, the fundamental picture, based on these analyses, is pretty bleak. We're talking about chronic unprofitability.
Even though revenue grew a lot in 2024, I think the number was over 40% growth.
Yeah, revenue hit $6.06 billion, a big jump. But they still lost over $315 million for the year.
So growing bigger but losing more money.
Essentially, yes. Profit margins are deep in the red, and analysts don't see a quick turnaround on earnings anytime soon.
And that unprofitability means they need cash from elsewhere. Right.
Exactly. They're heavily dependent on external funding, borrowing, or selling more stock just to keep the lights on. And that's a big risk, especially if credit markets are tight or investor appetite dries up.
Okay, so fundamentally weak. What about valuation? Is it cheap enough to be interesting? The sources mentioned extreme pessimism.
Well, cheap is relative here. You can't use a PE ratio because there are no earnings.
Right, no E in PE.
Exactly.
Yeah.
But the price to sales ratio, the PS, is incredibly low, around 0.08.
What does that mean in simple terms?
It means the market values the entire company at just 8 cents for every dollar of revenue it brings in. That's way, way lower than its peers. It shows just how skeptical the market is about their future.
Okay, so extreme skepticism priced in. What about the technicals? The stock chart stuff.
Also not looking good. The stock's been stuck in a range, roughly $1.01 to $1.15, but crucially, there's no obvious technical support below that level.
Meaning it could fall much further quickly.
That's the risk, yes. Plus, you've got sell signals from moving averages. The MACD indicator is negative. It all points downwards technically.
Grim picture. How are the professional analysts seeing it? You mentioned 16 to 19 covering it.
Yeah, the overall consensus is a hold, which sounds neutral, but given how far the stock has fallen, hold is actually quite cautious.
And the price targets are all over the place.
Very dispersed, from as low as $1 to as high as $9. The average consensus range is somewhere between $3.16 and 44 cents, but that wide spread just screams uncertainty.
What's the breakdown of buy, hold, sell ratings?
About 35% buy, a big chunk 57% at hold, and 7% sell. That large hold percentage really tells the story. Analysts see the potential rock-bottom valuation, but the risks are just too high for most to recommend buying right now.
So widespread caution, bordering on skepticism, even from the pros. It really makes you wonder if a company can pull out of a dive like this.
It's a very tough position to be in.
Okay, despite this mountain of bad news, are there any potential bright spots? Any catalysts the sources mentioned that could, maybe, turn things around for Agilon Health?
Well, there are always potential factors, even if they seem like long shots right now. In the short term, given how negative sentiment is and how many people are betting against the stock, the short interest, any positive surprise could cause a sharp bounce.
Like what kind of surprise?
Better than expected medical cost numbers, maybe some unexpected revenue strength, or even just signs they're making progress towards profitability. That could trigger a short squeeze.
Okay, so short-term volatility is possible. What about longer-term catalysts?
Longer term, things like changes in CMS payment rates are key. Those are the government rates for Medicare Advantage. Recent hikes have helped the sector a bit speculatively.
So government policy could help.
Potentially, but more fundamentally, Agilon needs to actually prove its value-based care model works, show they can manage patient care profitably and grow their managed lives sustainably.
So execution is key. Any other long shots?
M&A is always out there. The healthcare sector sees consolidation. Maybe someone sees value and tries to buy them, although a buyer would need a clear turnaround plan.
Right. So a few potential glimmers, but heavily reliant on things going right or external factors.
Yeah.
What's the final verdict from the sources, especially that A-Invest newsletter? How do they rate it overall?
They pull no punches. A-Invest gives Agilon Health an overall rating of just 3 out of 10.
3 out of 10. Ouch.
Yeah. They call it a high-risk speculation, plain and simple. They acknowledge that super low PS ratio means there could be big rebound potential if things improve dramatically, but the reality check is harsh. The constant losses, the negative technical trends, the lack of support, the cautious analysts, it all points to very high risk.
So what's their advice for investors?
Very clear. They say it's not attractive for short-term trading right now, and it's definitely not suitable for long-term investment either, at least not yet. The message is basically conservative investors should steer clear until there's concrete proof of improving profitability.
Okay, that is a stark warning. A really clear assessment based on the analysis. So for you listening, the takeaway from digging into Agilon Health is pretty powerful. What does this all mean for you?
Yeah.
I think Agilon's story is a really potent reminder, isn't it? That things like good corporate governance, financial transparency, operational competence, they're not just nice to haves. They're absolutely fundamental.
They're the bedrock.
Yeah.
And when those things start to grumble, like we've seen here, the market's reaction is swift and, frankly, brutal.
Yeah.
And maybe this whole situation leaves you with a question to think about. In this world flooded with information and stock tips, how do you actually tell the difference between a company with real underlying value and one that's maybe just a risky bet, especially when it's going through a crisis like this? Agilon Health really serves as a tough lesson in what can happen when management issues and financial problems collide. It forces you to look past the surface noise.
Absolutely. A compelling, if cautionary lesson in digging deeper than the headlines and really assessing the health and integrity of a company before jumping in. Well, thank you for joining us for this look into the challenging situation at Agilon Health. Until next time, keep exploring, keep asking questions, and keep working to stay well informed.